a seat, sip some wisdom, and stay a while. This is the Prosperity Lounge, where growth gets personal. Step inside, we're breaking chains.
Good evening, everybody, inside the Prosperity Lounge. Getting ready to go live in about 3 minutes. I'm here with Joe Lapera.
Hello.
He's excited from Lapera Insurance. You may have heard that name a few times. One of our prosperity partners. We can learn all about insurance tonight. So I'm excited.
It's not a very exciting topic, but we'll try to make it exciting.
It's very exciting. Yeah, it's going to be fun. We'll do our best to have some laughs along the way, I hope, because it could be a pretty heavy topic. So, you got questions for Joe? Put them in the chat. We got a bunch of people here already. Got 6 people already. We've started. Great. Thank you all for being here. So, hours go by pretty fast. I should have asked Joe ahead of time. Sometimes what happens after the hour when we're done live in the video, we kind of hang out a little bit still on YouTube if you have a few minutes after.
Sure.
Sometimes the chat goes really heavy and you ask questions, so we have a little bonus time.
Works for me.
Perfect. So, those insurance questions. He will tell you when we start what state he's licensed in. So if you're not one of those states, legally, he can't tell you the answer.
That's true. I can give you general info.
He can give general info and tell you to visit somebody. So perfect. So we're going to get some here today. The mic's going. Looks like we got some good feeds on here. So perfect. It's good to be back live. Like last week off from holiday. We went live at home from the studio from the radio show. It's good to be back. Topic and not just be talking for an hour by myself. I don't miss
it. It'd be lonely.
It can be. All right, let's see what we got going on. We have another minute or so before we go. Knock the glass minutes. If you listen to me. All right, we have a minute to go. Perfect. Welcome on the chat. Getting ready, get the music playing soon. Here's the theme song. Welcome back to the Prosperity Lounge, where hope meets freedom and growth gets personal. The show where we blend money, mindset, purpose, and the people who make our communities shine. I'm your host, Joey Ruffalo, and before we dive in, a huge thank you to tonight's sponsors. If you're watching on YouTube, pleasure of seeing all the QR codes go up on the screen. First, we got Bella Business Solutions. Bella Business Solutions. Mention Make Business Make Sense for a free consultation. They're helping entrepreneurs grow with clarity, systems, and real strategy. And Lapera Insurance, call 865-252-0480. That's 865-252-0480. Email Joe Lapera at jlapera, that's JLAPERA, at farmersagent.com. Use promo code radio, and first 10 votes this month get a free gift card. Joe's actually in studio tonight, so don't make me look bad. Don't make me look bad. He's helped protecting families and small businesses with personalized community-centered coverage. We appreciate their partnership and their support of this mission. And remember, Wednesday night, 6 o'clock on YouTube, we also have some live chats going on. It's fun to be in there and kind of converse with us and see what's going on from the videos from around the country and around the world. We've been talking to some people that are just worldwide. We have a couple of interviews from Australia coming up, Denmark, some people that are doing fantastic and amazing things. You don't want to miss it. And if you do miss it, you can always listen to the podcast at theprosperitylounge.com/podcast. Or you can go to the prosperityloungepodcast.com. I forgot I had that URL as well. The prosperityloungepodcast.com, or you listen on Apple or Spotify, iHeart, Amazon, Pandora, Stitcher, or wherever. If it's a podcast app, you can find it there. That's where I would say to go. And of course, Fridays we're here live, 6 to 7. Dare I do it? 6, 7. on the radio. Joe's already
Never gonna die.
ready to leave. Apologize.
I'm out.
Speaking of Fridays, next Friday is a big one. Circle the calendars, mark it down. If you only listen to one other show of the year of mine, which I hope you listen to them all, but if you listen to one other show besides this one tonight, next is the one. If you've been wondering if you were on the nice list or the naughty list, getting what's on your list or a lump of coal, well, you have one last chance to find out, as Santa will be here live in studio to answer all your questions. We'll have a special number to give out next week live. We'll have the YouTube chat going on. You can actually go right now to theprosperitylounge.com/Santa show, and you could submit a question for Santa, and we'll read it live on the air. It's got to be appropriate, though. Don't send Santa some crazy questions. If you also go to that website, what's really cool is all proceeds from that show are going to go benefit East Tennessee Children's Hospital. We'll have a representative here in studio with Santa, talk about East Tennessee Children's Hospital. There's some great opportunities to sponsor that show. And like I said, all sponsorships from that show are going to East Tennessee Children's Hospital. So it's a special show, special opportunity for you and your business to get involved. Again, www.theprosperitylounge.com/Santa show. Check out the sponsors. We already have great, wonderful sponsors step up, in addition to our awesome partners, Fellow Business Solutions, Lapera Insurance, Simply Magical Vacations by Amy. If you don't know Simply Magical Vacations by Amy, you have any networking meetings anywhere around Knoxville in the last, I don't know how many months or years. Very active all over the place, active with the chamber. She's a really awesome lady. She has stepped up to be our title sponsor. So make sure you're subscribed, set those alarms and notifications, because you don't want to miss Simply Magical Vacations by Amy presents the Prosperity Lounge Santa Show next week, December 12th at 6 o'clock live on YouTube on 96.3 FM. Now, let me open the question that's going to make every one of us think. If something happened tonight, a wreck, a fire, medical emergency, do you even actually know what your insurance would do for you? Or would you be learning in the middle of the crisis? A recent survey found that 54% of Americans don't understand what their insurance covers, and 72% don't know their deductible. Even more surprising, about 4 out of 10 households have zero life insurance. Man, that's crazy. Yeah. So insurance touches everybody. It's every part of our financial lives. Most people don't understand it. And tonight we're going to fix that. So I have with me tonight, calling this the insurance playbook. Joining me tonight is a trusted friend of the lounge, a prosperity partner, Joe Lapera, founder of Lapera Insurance. Joe, thanks for pulling up a chair. Welcome to the Prosperity Lounge.
Thanks for having me, Joey. It's a pleasure.
I'm excited to talk to you because there's a lot of stuff going on. The chat is way going on here. Lot to take in. I think we have some friends of ours in the chat. I see Carol here. Hey, Carol. Nice to see you. We got a fan of PL, a fan of the Prosperity Lounge. We got Emmy Joe's in the chat. We got Soul Vice Truck. We got all the regular people here. So it's awesome. Thank you guys for being here to learn all about insurance. So, Joe, before we jump into all the technical stuff, let's share a little bit about your story. How did you get started in the insurance world?
You know, it's kind of a funny story. So, little background: I grew up in the restaurant business.
Mm-hmm.
So, as my family ran a restaurant, and my mom decided to get in the insurance in the '90s, and I ran my dad's restaurant. And early 2000, we sold the restaurant. She goes, "No, Joe, why don't you come work for me, learn the insurance business, and then one day you can take over?" And I was like, "Absolutely not." I was like, "I only know family businesses. I got to go do something on my own." So I went into the corporate world, learned all about customer service, group benefits, the systems you need to provide good customer service. And then I was like, I don't want to work for somebody else. So I ended up starting an agency, and my mom was the best. She was my mentor, helped me with my business, and then eventually bought her business and keep going.
I love that. Now, let me set the stage for the listeners. There are other questions coming in. We're going to get to those in a little bit. But, before we talk policies and everything, we need to talk purpose. One of the things for insurance, basically, insurance exists for, I believe, exists for one core reason, and that is to transfer risk away from you and the insurance company. Now, we're going to talk about some key terms, follow along here, so if you got a pen and paper, write them down, but you can always go back and listen to them. As long as you're not joking. All right, otherwise, you're going to file a claim. All right, so some of the terms we're going to think about initially are risk transfer, premium, deductible, and liability. So let's break that down for the audience a little bit. Let's talk about risk transfer for a bit. So risk transfer, from the way I understand it, and I'm going to play the role of layman tonight. You don't carry the financial burden alone. You're paying a premium. Insurance companies agreed to absorb that major cost for you, covered event.
That is 100% correct.
Yes, so far, ding ding, 1 point for me. Premium is the amount you pay monthly or yearly for your protection.
That is essentially, you can consider that as part of your risk. That's you pay that, and the insurance company, that's how your deductible will pay the risk. So yes.
Yeah, perfect. Now, how all that's calculated, how that's figured out on an annual basis, state by state.
Complicated, figured out.
We don't want to get it done because it'll take more than an hour. Deductible is the amount you must pay out of your pocket before the insurance kicks in.
Yep, that's 100% correct.
Oh, good. I'm 3 for 3. And liability, the amount of the insurance company will pay to others if you cause them more damage.
In most cases. So if you're liable for something, that's the insurance company, and they will also legally represent.
Perfect. In your experience, Joe, why do families underestimate how desperately they need proper coverage?
I think it's a lack of understanding. We now live in a world. Anyone who turns on the TV and waits about 10 minutes would probably see about 5 insurance commercials, and they all talk about saving money, and that's great. I'm never against saving money, but we forget what insurance actually does. We worry too much about the actual coverage themselves.
Sure, and I think a lot of times people are, like you're talking about the coverage part of it. There's a lot of people who maybe think they're covered, but there's a cost prohibited from covering themselves fully.
Yeah, that's the other thing. I mean, they'll say, "Oh, I have full coverage," so they assume they're just covered for everything, and they don't fully understand that the body injury means something, and 25/50 means something. It all serves a purpose, and you don't do insurance on a regular basis. It's hard for for anyone.
Yeah, I got that coming up in a bit. That whole 25, 50, 15. Each state's a little different. Each
Tennessee's 25, 50, 25.
That's right. I came from a state that was different, and then moving. Well, that's a good teaser. Most people think insurance is about fear, but we kind of teach people that it's about freedom, right? When you're properly covered, you're free from financial devastation. You're protecting your house. You're protecting your assets. That's your target, right? Protecting your assets.
Yeah. Yep. Protecting your experience tomorrow's day.
That as well.
Yeah, I mean, peace of mind, right? I think that's the greatest feeling in the world. When you know that if anything happens, any catastrophe that could potentially happen, you've got protection in place.
It's one of those things that you, on a daily basis, don't think about, and then when you do think about it, you think you don't need it until you need it.
Exactly. Yep.
And then you're glad you have it.
100%. Or, unfortunately, a lot of times you're like, man, I wish I would have known this ahead of time.
Yeah. And there's a lot of changes in a lot of different categories of insurance over years. We're not going to get too much into health insurance, but previously health insurance would have something like pre-existing conditions weren't covered.
Right.
Pre-existing are covered, and if you got injured when you broke your ankle and you went to another company, they would cover your broken ankle.
Right. Yep.
So you're kind of stuck there, staying with the insurance company at the mercy of whatever rates they would raise it to, or whatever else. So there's a little bit more freedom nowadays, flexibility. So, yeah, let me make sure we're on here. Perfect. So let's break down a little bit of those 4 categories that most households interact with. We're talking about. So what I'll do is I'll set up some definitions, and you fill in the rest in real life application. So I'll set up the pins, you got them down.
I like it.
Perfect. Auto insurance.
So obviously that insurance is to cover your vehicle. A lot of people think, oh, if I get in a wreck, $10,000-$15,000 of damage on my car, they repair the car and move on, which is accurate. However, people tend to forget that the more important cost is if you're in an accident, there's a high likelihood someone's going to get injured.
Mm,
And, I think everybody knows medical costs are outrageous
yeah.
and they're only getting worse. And your car insurance has to cover those medical expenses.
Yeah.
Otherwise, you're facing potential legal activity. So if I were to rear end you and you were to get injured, you're out of work for a while, what's that going to cost? We need a surgery. And if I don't have the right liability limits, I could be in a financial pickle real fast. And so it's the liability limits actually matter way more than thinking of full coverage or what your deductible is. A lot of people don't realize that. So all this you'll find really protects you financially. Your car is an asset, right? And so you want to repair that. But on the same side, you don't want to be sued. You don't want to have to pay for an attorney. Let the insurance company take care of that.
Yeah, it's one of those I think the most used and most misunderstood policy is probably your auto because you don't get the different policy limits and what they all mean. So, you said something earlier in Tennessee, it's 25, 50, 25. Okay. I gotta change my notes. I got that wrong. I had 25, 50, 20, 15. I'm off.
Well,
Sorry.
every state's a little bit different in it.
Yeah.
Change, so.
Absolutely. So, but it's funny because the average car accident with injury costs $61,000.
Yep.
So if that minimum coverage with that 50,000 per accident part, you're not being able to cover the amount. You're going to be out of pocket even more.
Right. Well, and let's break down those numbers. 25/50/ could be whatever 20, 25. So $25,000 per person. So I injure someone in an accident. The maximum my insurance company will pay is $25,000. That's a visit to the hospital and a night over. You've already gotten that out of the way.
Right.
The $50,000 is the maximum they'll pay for the accident. So if there's 2 people injured, the max they'll pay is, so if there's 3 people injured and you're exhausted real quick.
Mm-hmm.
And then the $25,000, that's to cover the property damage. So that's repairing the car, those type of things. And yet they're the state minimum. So the state says by law this is the least amount you can do, but by no means does that mean it's enough. And unfortunately, most people are driving home with that coverage.
I was working with a client one time, and they had just bought a new car, and they had the minimum coverage here, and their car value was worth more than $50,000. So it was like, oh, you need to get a higher coverage.
Yeah.
If your car is damaged or totaled, you're not
right. Yep.
That's one thing to look at too. Yeah, there's minimum coverages, but it's really covering what you need to protect yourself, and it's not. And again, another client who got into a car accident about a year or so ago. They were pulling out of a parking lot, going across clear lane. Somebody was in the turn only lane, were going straight. We have weird turn only lanes here that I grew up with roundabouts and everything else. Here there are just these weird turn lanes. Just either you drive straight through, or people just decide to make it a 4th lane on the road. It's not.
Yeah.
And they drove through that and hit the person in the front, and they, insurance simply took over. There was a deductible for collision and all that stuff in their car, but they got a letter that they were being sued.
Yep. How happened?
Subjugation took over, and eventually, month postponing court dates, the other company decided to do anymore, and they were fine.
That's good.
It was months on edge of,
Well, and that's just like if you have the right coverage, you don't have to worry about being sued. Yeah. Because the insurance company will pay it, and they won't come after you personally.
Yeah. From what I understood here in Tennessee, it was one of those things. They weren't being sued personally, but they had to go and be a part of a court case.
Yeah. Well, you said segregation. Sounds like they were trying to get their insurance.
Yeah. They were going, but still very scary to get something like that in the middle. But if you have the proper coverage, you don't have to worry.
Yeah, just hand it off. Let the insurance company take care of it.
I love that. That's what it's there for, to protect yourself. All right, next we got homeowners and renters insurance. So a couple of things we want to talk about here. There's 2 different types of concepts that people often confuse: actual cash value and replacement cost value. Let's start with actual cash value.
Yeah, so actual cash value basically means we're going to depreciate the assets. So if you have a 10-year-old couch, we're gonna say, well, it's, to buy one new today is $1,000, but it's 10 years old, so we're gonna reduce it by X amount of money. In the home world, that means we're gonna give you what the value of the home is, not necessarily what it costs to replace it. And that's typically not going to be enough coverage. And so we usually recommend doing replacement costs. What replacement cost is, we calculate what it costs to rebuild it like it was brand new. So you're getting enough money to truly replace your home in the event of a total loss.
Okay. So insurance for actual cash value is insurance paying what the damaged item is worth today.
Basically depreciates it, yeah.
But for a home, it's whatever the home's market value is.
Right. Or say it's not a total loss, right? And say it's the siding. If you have actual cash value, there's a good chance every policy is a little bit different. So we'll talk general terms. But if your siding needs to be replaced, it's old, they're not going to give you the full amount.
Right.
So replacement costs.
Okay.
They'll pay what today's dollars are needed versus depreciating.
Okay. And then replacement cost value would be if the home is told. Let's say we live, unluckily enough, a few years ago, we had a tornado came through Knoxville. Homes were damaged, some were completely damaged.
Yep.
So let's take that for an example. Some people live in Florida, the coastal areas with hurricanes. Let's not think for a second hurricane coverage and all these other things are just a little bit. This is strict, home is completely total gone.
Yep.
You have actual cash value policy. They will pay you what your home probably was on the market for, what the
plus
underlying.
Yeah, but they do factor the age too. So
okay.
And then you'll have a different coverage item for the personal property in that they'll treat them completely separate. But yeah, it'll be depreciated. Usually, we'll not get enough to replace that home. Even if you buy a home somewhere else, you're probably not going to have enough to replace it unless the values of the homes in the area have gone down or something like that.
Okay. So, and then replacement cost value in that same situation, by replacement cost value of coverage, it would be here's the money to build it exactly like it was.
Exactly.
But no. Okay. So I've run into situations where people, especially when you live in a market where home values shoot up a lot, but people don't go back and adjust their coverage. So if something happens to them,
it can be an issue.
Fully covered.
Yeah.
Cost value.
So thankfully, a lot of insurance companies have like inflation. So there's each year you'll see your replacement costs go up. That's part, your premium went up a little bit. You'll see that your dwelling, that's the coverage line item to rebuild your home. So there is some coverage there. However, there are times where the area skyrockets in cost. Like if a tornado comes through, to build things is going to go up instantly because the supplies are immediately going to reduce. So there's coverages you can get, like extended replacement cost, guaranteed replacement cost. I'm sure we won't go into full detail on that. Sure. But what I will tell you is if you have mass destruction and builders come in, they're going to go find the people that have the better policies with the higher coverages, and they're going to go take those first. So you make yourself more like you have a higher likelihood of getting taken care of quicker if you have good coverage. Yeah, exactly. More attractive is a good word.
Yeah. You need to be attractive on paper, not just attractive in person. So like Joe is. So it doesn't work. Our charm doesn't work all the time. If you want it. So that's interesting because I know there's some people who, they buy a policy maybe 10 years ago, and the inflation's in there, but you have situations, let's say in East Tennessee here, where the average home value, let's say prior to 2020 was very low, and now it's very high. People may not have gone back, especially people who have been in their homes for a while, may not have gone back and looked at their limits, coverage amounts, and that's something that needs to probably be adjusted annually to kind of look at it and fix it and stuff.
So, and another thing that happens is we all make improvements to our houses, right? Like you said, a 10-year-old house, I'm sure they've made some kind of changes to it. And if you haven't updated your insurance policy, that's where you can really create a gap in coverage because the value does matter. Rebuilding process is supposed to take the value out a little bit. I like to take the analogy of if I build a house and I put it exact same house, I put it on the water, and I take the exact same house and I put it next to this radio station. Nothing wrong with this radio station, but it's just not on the water. The one on the water is going to be valued a lot higher, right?
Right.
However, to rebuild it, it's about the same cost. So, but you have to factor the changes in over the years, and so it's good to do those reviews on
Yeah, something I recommend as part of the annual review process when going over people's financial plans anyway is look at the insurance coverage just to make
Absolutely.
sure we're good to go. Now I'm going to skip number 3 for a second and get number 4 on my list, which is health supplemental coverage. And we're not going to touch too much on that, even though we are both licensed health producers in the state of Tennessee. We don't really want to get into that too much because it's open enrollment season. So if you're needing to get coverage, make sure that you do it now. But medical debt is the number one cause of bankruptcy in America. And a couple of the key terms I just want people to understand is, deductible, obviously, again, that's what you pay before the insurance pays. Some of that stuff there. Your out-of-pocket maximum. That's the most you'll pay in a year before insurance covers 100%.
And keep that in mind if you have things you want to get checked out or procedures. If you are close or you hit your out of pocket, don't put off that whatever, knee surgery, whatever. That year might be the year.
Yeah, I remember when my wife a few years ago had major surgery. For us, she ended up having all subsequent testing and follow-up
Knee
and
attack.
scans all covered because the surgery itself had her out of pocket.
Yeah.
So that was great. Now, this year we're looking at, can I get a scan? Oh, it's going to cost how much? Didn't it used to be free? No, it was free because we had our out-of-pocket max. Not necessarily free, but we didn't have to pay for it because we had our max.
I have a story on that too. So my youngest daughter in 2017 was born, and I was having knee issues. I told the wife it was 2 weeks before she was born. I said, you know what? Next year, when things calm down, I'm going to get my knee checked out. I'm pretty sure I need a knee surgery. No, you're doing it now. I'm like, we're having a baby in 2 weeks. She's like, we hit our out-of-pocket max, and we have to do it now. So 2 weeks after she was born, I had a knee surgery and couldn't walk for 12 weeks. And we had a newborn. My wife, being awesome,
Take care of you
took
both.
the brunt. Yeah, for sure. So,
The other thing is co-insurance. That's basically where it's a split between you and the insurer. Sometimes you'll see things like 80-20, 70-30. The more risk that you end up taking on, let's say that 70-30 policy is going to be cheaper than that 80-20 policy because you're paying more out of pocket to cover things. So it's all part of your overall plan there. And then there's other things like supplemental things like accident, cancer plan, some other things that get involved in that. But talk to your agent, talk to your trusted person there to figure all that out. But I want to get into something about life insurance, and I know that's a big component for you in your line of work.
Yep.
I'm also a life producer, but don't do anything with the show. There's a lot to talk about. How about that?
there you go.
48% of U.S. adults say they need more life insurance, and 1 in 3 households would face a financial hardship in 30 days without it. Now, there's two main terms, two main types. I'll throw that. It's going to have a term, whole life, or permanent.
Yep.
And there's variations of things under universal whole life, the standard.
Right.
So, term for people listening and watching, term is you have insurance for a set amount of time, a certain amount for a set amount of time. If something happens at a set amount of time, you get X. You have $100,000 coverage for 10 years, coverage for that for 10 years. You pass away in that 10 years, beneficiaries get that amount. Tax. It's very affordable. It's pure protection. It's probably the cheapest form of insurance. You can buy $1 million coverage for a couple bucks a month.
Yep.
You won't see any other.
That's another statistic. A lot of people believe life insurance is far more expensive than it really is.
Yeah.
It's usually less expensive to insure yourself than your own car. Like if you do it early enough, it's extremely expensive.
Yeah. The other one is whole life or permanent life, and that can cost more compared to term. You usually get less amount, but you're covered for your entire life. And it's usually used for estate planning, tax strategy, legacy planning. I want to break down a little bit the difference between the two, what makes sense. Obviously, it's going to be, I'll throw this caveat there, what makes sense for you personally in your plan is what makes sense. So I can sit here and spout term life is 100% better than whole all day, but in your situation, you come to me, you sit down, man, you maybe whole life is better depending on what you're going to do.
Definitely case by case, for sure.
Yeah. So we've seen things where sometimes we'll tell people to price out the difference. So let's say $100,000 policy, whole life policy is going to cost you $200 a month. Just make it up. It's probably just make it up for the purpose of this conversation. And I go say, hey, term you might be able to get $500,000 for $100 a month, but that term is going to end in 20 years. Well, what I suggest people do, and this is a strategy, is you take that $200 that you earmarked for insurance, you buy your term for 100, you invest the other 100. By the time your term expires, you have a nice little investment account that you're self-insured with.
Yeah.
Come through that.
That's one way to do it. Another way, there's no reason you can't have both. So a lot of times what we'll recommend, again, it's case by case. There's so many things that factor in. But when you're young, especially if you have children, you should do it for your children, is get them a permanent life policy. Most of them, if not actually all of them, will build cash value. Some of them have flexible payments where you can put more in, so it acts like an investment plan. Plus, they have life insurance, and it's extremely inexpensive the younger you are. So I recommend term insurance early on, as early as possible. It becomes an emergency fund. You can do a lot of benefits. We won't get into all the details. Then you get older and you get married, you buy a house, you have children. Your liabilities or your responsibilities are far more than when you were 20 years old or whatever, right? So that's the time to get term insurance, so that you can make sure your kids have a roof over their head if something happens, make sure that mortgage gets taken care of. So a lot of times I recommend doing a combination of the two. And I'll give you a quick real life story. In fact, full disclosure, I was a couple minutes late. Joey was totally cool about it, so thank you. The reason I was late, this literally happened as my last call before I left, is a mom called me who took out a permanent policy on her son. Well, that son's now an adult, and he got in a really bad accident, and he basically is going to be in the hospital for several weeks, and he's not going to be able to work for months.
Wow.
So he's got a mortgage, he's got all these things, and she's like, we're just trying to find any kind of money and get cash value in that life policy. So we're actually going to pull that cash value out. We're going to do it as what's called a loan, but you're going to pay it back to yourself. So you're not actually paying a bank or a lien holder or anything. You pay it back to yourself. It's tax free. And now he's going to have this chunk of money that he can now pay his mortgage and take care of these things. So that's another benefit of permanent insurance. You got to do it young enough, and and then you always, as you get older, term insurance is a great thing to add to it.
Yeah, one of the things with term, when you're thinking about the amount of term, let's say you have kids at home that are 6. Do you want a 10-year term? So if something happens in that 10 years, they're only 16.
Right.
You might want to look at a 20-year term. That's going to take the kid to 26. If something happens, at least college is paid for. Maybe stuff is set up, things that you can plan. If it's just you and your wife, you get a smaller coverage term or whatever. Think about different policies, but you really want to make sure you're planning correctly. Not everybody needs a 30-year level term price, $1 million coverage.
Right. Yeah, it depends on your needs.
Yeah.
And if you go to a qualified professional, an agent, they have all the tools. They can identify exactly how much you should have. They should be able to tell you a range of what it'll cost and be able to set it up. With the great news, I've been doing this for 18 years, and the process to get life insurance in the beginning was like weeks on end, and paper. It took me an hour just to get through the application. I hated it, quite honestly. Now, 84% of the people that I do a quote for get approved, or we get a decision within like an hour.
Wow.
And no medicals, none of that stuff. So that excuse, like I don't have time for medicals, all that stuff's gone now. Almost every company has what they call an accelerated underwriting process. It's never been easier, and it's actually, and today, as long as you're healthy, this is the least expensive life insurance cover because it's driven by your health and your age. So every time you get older, it only gets more expensive. So there's no reason to wait to get life insurance.
And I believe there's the term coverage now that there's convertible term.
Yeah.
So you can get term, and at the term ends, you can stop paying, or you can convert it into a whole life policy.
Exactly. Yep. And then there's another term policy, which is kind of great. It costs a little bit more, but after 20 years or 30 years, they'll give you the majority of your premium back. So you get this nice chunk of money at the end of it, and then pocket it, or maybe use that to over a permanent policy.
And what you mentioned earlier is with your client situation, pulling money out, cash value loan. Now, one thing to remember out there in radio, YouTube land, is you pull it out, you can pay it back.
Yep.
It's fine. So let's say you have $100,000 coverage, and you pulled out $40,000 cash and happen tomorrow. Well, insurance companies, they're not going to send you a check for 100,000. They're going to send you a check for 60.
Right.
So just remember that. So if you don't pay it back, they already pre-gave you money. So a lot of times I've seen that happen where people take the loan out, didn't pay it back, and then something happens to their loved one. They're like, wait, it's supposed to be this. It's not, because they forgot to take the loan out, they spent it on something else. So just be mindful when you have that going on, and you use that.
And ask those questions.
Yeah, for sure. Like, if your agent's not willing to answer your question, get a new agent.
Yeah, I mean that's the problem. That's the only reason we're there is to be the expert. None of us can be the expert of everything. So we're here to be that expert.
Now, there's one other policy that falls within the universal. You might have touched on a little bit. I think it's a yeah,
Index universal life.
Because I've seen a lot of people today calling it you're kind of acting like your own bank.
Yeah,
which is a fantastic thought process if you can wrap your head around. Make it work.
We'll get into all the details, but it's actually my favorite policy. So index universal life, you might not know. So in the index, that people have probably heard, the S&P 500, the 500 best stocks in the market, in the U.S. Market, and this basically mirrors that. So a portion of your money will go into pay the life insurance. The rest will go into an account that takes on the returns of the S&P 500. And there's other index stuff. I'm trying to keep this simple. So say the S&P 500 goes up 20%, you'll get a chunk of that. You probably won't get all of it, maybe 12.5%. I think what it is right now. But this is going to happen soon in the next couple of years. The S&P 500 is going to have a horrible year, maybe down 20%. You will not lose a cent of your cash. And so then when the markets go back up again, you're going to be starting at zero, where everybody else within the actual stock market will be starting negative 20. So it actually outperforms a regular S&P 500 index over the last 2 years. It's actually done better. So you not only getting life insurance, but you also have another avenue to pour in cash that you can actually take out tax-free. There's a bunch of methods in how to do that. That's that be your own banker card. Right. So it's amazing. It takes time to build it up, though. It doesn't happen overnight. And you want to overfund an index universal life. You never want to pay the minimum. Otherwise, it won't work.
Absolutely. All right. So I want to move on a little bit to, let's actually have some questions in the chat about other types of insurance, like pet insurance. Do you deal with pet insurance?
Yeah, we do. We don't do a lot of it. But yeah, we have a pet insurance option. That's becoming more and more popular now too. Yeah. But it's the same thing for humans, right? Like our dogs, we love them. They're our family. Cats too, but I'm a dog person. They're like family to us. We want to make sure they're taken care of. When things happen, it can be expensive. That pet can help. I've paid, my wife paid like $5,000 for deer, love it, lab. When it passed away like 8 months later, do it all over again.
Remember when my cat was sick, I just whipping out that credit card at UT Vet Medical Center.
Yep.
Whipping it out. And I realized, anyway, don't think about it at the time. You just want to, anyway.
Conversation for another.
Yeah. There's another kind of coverage that you specialize in. We've talked about this in our networking group. It's the surety bond coverage. Tell us a little bit about that.
Yeah, security bonds. They play a lot of different roles. If you're a business owner, like a contractor, you've probably been required to have a $10,000 contracting bond. But what a bond is you're paying an insurance company a much smaller amount than $10,000. If something were to happen, that surety company would pay that $10,000 to wherever. Where it's really needed, and if there's any attorneys out there that can help you, is if you do anything with state, if someone passes away and you got to handle the state, most courts require a probate bond. And people that don't know where to go with them, it's kind of this niche kind of thing, and we have some really great options for that. And what we like to do is partner with the attorney. The attorney can be like, hey, we'll get this taken care of for you, and we can really help out in that process. I've got several attorneys that just love that process, and that way they can take care of their client. They know they're going to be found right away. Because I think the worst thing is how your client goes through this, and this, and then they don't know what to do. Yeah. They sit on it for weeks or months. We can help take care of that.
Now, is that one of those things that's a state by state basis, depending how they handle it?
Yeah, 100%. Yeah. Basically, a lot of times, if someone passes away, whatever their state is valued at, the courts will require 1.5 times that in a bond for
Mm.
the executor. So the executor obviously runs the estate, and I'm not an attorney or anything. So if I get anything wrong, I apologize. A little out of my area, but from what I understand from my attorneys, the executor now controls the estate, right? And that estate could be worth $10,000 or $1 million. And so the court said you have to have a bond. So if you run away or mismanage the money, this bond will protect the estate and whoever the beneficiaries of that.
Interesting. That's interesting. Because we had a situation where we were dealing with that in another state that didn't come up.
Okay. Yeah, it's
But
definitely going to be.
I know Tennessee's pretty heavy in the trust
Yeah.
aspect, so there might be something to do with that too. Some
Yeah.
you handle stuff in
Illinois is huge.
Illinois.
Do a lot of those probate bonds.
Interesting. So that situation's coming up where you need that situation, definitely reach out to Joe. We'll definitely take care of you. If you're one of the first 10, get a gift card.
There you go.
Get a call. All right, let's talk about some issues here that people only find out after a claim is denied. And that's going to be one of those things that happens a lot with people. Claims are denied, especially in the health insurance world, which we're not going to get into too much, but claims get denied. We deal with that all the time in my life situation. She has to get 2 scans every 6 months. They always approve one and deny the other.
And then you got to fight it.
And they deny the letter. I'm going to throw this out there. But the letter comes back and says, "We're denying your scan of your face, but we understand that you have an issue with your face. And we recognize there's an issue and it needs to be taken care of. We're denying the scan to take care of it." And that's just the wording they kind of basically do.
That's crazy.
And then they got to appeal it. And it's like, yes, it's approved. And this takes like it's
Yeah,
a
it feels
whole
unnecessary, and
process.
it's got to cost the insurance company much money too. Like it doesn't seem efficient at all.
We always get like 5 letters in the mail. It's the the denial, the approval, the appeal. It's like save it or just approve it the first time.
Right.
It's an ongoing. We need it every 6 months. Just put it in our system that we need it. But yeah.
So can we stay on the claims real quick?
Yeah, absolutely.
For car insurance, home, and all that.
Yes, we're going. Perfect.
Perfect. This is where an agent is worth their weight.
Oh yeah.
First of all, my recommendation, if you have an agent and not a 1-800 number, is please call your agent first before you file. Now I get it, 3 in the morning and that kind of stuff. You want to call the agent, that's fine. But if you can, talk to the agent first. He knows what he's doing. He understands the company that he's representing for you. She'll know all the consequences. They can help you say things the right way, word things the right way. It all matters. We'll never tell you to lie. I will tell you, you want to say it this way or you want to say it that way. Perfect example, if you get rear-ended, they're going to want to know, were you moving or not? So I'm going to ask them, were you moving or not? If you were stopped, make sure you tell the insurance company that because they're going to take a recorded statement. You have to say it the right way, or you might not get the full coverage that you're allowed to have. But real quick, I had a client water back in the basement. This is in Illinois. It was in 2017. It was a massive flood. And 3 o'clock in the morning, he calls the claim. And mind you, 800 claims people, their only job is they have to file the claim as soon as you call, and they have to say everything you said. And so all these, yeah, there's 5 feet of water in my basement, and it's so bad it's coming through the windows now. And so the person documented all this, and the next morning the claims rep called them like 5 in the morning. Kudos to that claims rep to be on top of it, but he denied it. And so he calls me and he's like, "Joe, you told me to get this coverage. I don't understand. Why am I denied?" I said, "Well, let's talk about it." And he tells me the same story. Water's coming through. Like, where did this stuff? As well, it was the toilet in the basement. That's all I need to hear. That is a loss. Water coming through the window is a completely different policy. It's called flood policy. Your home policy has your drain on it. It's covered. You make a call. All the adjuster said, "Hey, it started here." He goes, "Oh, okay, we can cover it." $27,000 later. Now, if he called the 100 number, didn't have a dedicated agent, I don't know that he's getting that same information. They can have that covered.
Wow.
So,
That's
and
crazy.
my office had 4 feet of water in the basement while we did this too. But my wife said, "Well, you're going to have to close." Like, nope, today's the busiest day. So we stayed open with the water in the basement.
Wow. Yeah, that kind of goes back to the story that my client got into the car accident. The first thing they did was call their agent.
Yep.
And told the agent everything. And
That's
the agent told them what pictures to take, what to tell them, if to call the cops. Because here in certain types of accidents the cops will come or
Right. Or if it's private property.
yeah. So what to say to that part of that subjugation coverage? Yeah, they had so much evidence proving, even though initially it was like, it's more their fault than the other guy's fault. Once they get all the coverage done, and they go through the pictures of what was done, I was like, I think we're not going to win this one, so move on.
Yeah, it's important. And if anyone's ever been in an accident, most of us have. You're not thinking straight in the morning. Your adrenaline's running. You're in a totally different state. You're not
Yeah.
calm and rational. So it's always great to talk to someone who's going to be calm and rational. Tell you to take pictures, get the police report, get the other driver's insurance information. And then just as important, like what to say when you talk to the underwriter or what have you. The other thing too is just because someone gets a ticket doesn't mean they're fully at fault. The ticket and what the insurance company considers at fault is totally different. So just keep that in mind as well.
So I want to get into a couple of things here with the these risk plans and budgeting reviews that we kind of talk about with clients. Is try that again, folks. Tongue tied there. Underinsured liability. Most people have the state minimum. We talked about this a little bit earlier. The lawsuits for severe injuries could exceed 250, 500,000 and up.
Easy. Yeah.
Yeah. So you want to make sure that you have the proper coverage there. It might mean it costs you more per month, but again, that peace of mind.
Yeah, I mean, the dollar amount is very small relative to the coverage you're getting. So just back to that peace of mind. An uninsured, we talked about liability earlier. If I'm not fault in an accident, making sure to take care of the other parties so that they don't come after me personally. Well, the uninsured, underinsured on your policy actually protects you. So if Joey rear ends me, no insurance, he has, what everybody else has, limited amount. My insurance will kick in and help cover above and beyond. And so even if other people have bad insurance, you should have good, better liability so that you make sure you're taken care of if something happens. And it works in a lot of ways, but people don't know. I've had so many situations where I've helped people with claims. I've had someone, get hit by a car while they were a pedestrian.
Wow.
By the way, your auto insurance can cover that.
It's good to know.
No one knows that. That's your tidbit for the day.
Put that in the comments. That means you were watching this far along.
There you go.
Homeowner deductibles, they don't understand. Some people unknowingly choose 2% deductibles. On a $400,000 home, that's $8,000 deductible.
Yep.
Wow.
So there's a couple of things. We now live in a world where it's really hard to get away from percentage deductibles. They were optional for a long time. Nowadays, for wind and hail, a lot of companies, and so what wind and hail means your home is damaged either with hail or a result of wind, so a tornado, tree, wind blows your shingles off. They're now requiring a higher deductible. That's usually where you see the percentage deductible. Yeah, 1%, 2% doesn't sound like a lot until you know it's based on your dwelling. So, like to your point, $400,000 home, 2% deductible, that's an $8,000 deductible. And it doesn't always say $8,000, it just says 2%. So, yeah, you want to be aware of that. Because unfortunately, we live in a world where everyone's looking at the bottom of the paper and that price. There's not a single insurance policy that's exactly the same. So you have to understand what you're getting. You can't just base it off of this.
It's like if you have collision or comprehensive deductible on your car, and it's a $1,200. You have $1,000 deductible and it's $1,200 damage. You pay the $1,000.
Yep.
You're like, oh, it's $400. No, you're still paying $1,000. The insurance and the other $200.
And this is why you have to talk to your agent, because that happens a lot. Like, oh, we're covered. I'm just going to call and file a claim. Well, that's the other issue. People are like, oh, I'll just file a claim, and if it's not covered, they'll just take it off. Another dirty secret for you guys, especially on home insurance. Roofers knock on your door, say, oh, we're going to get you a new roof, and you do this, and blah blah blah. So you go, oh yeah, I'll file a claim. No big deal. Well, first of all, if you do a couple of those, some insurance companies are notorious for dropping. Even if none of those claims pay out, you file them and they go, oh, you've had 2 claims in a year, we're going to drop it. And every other insurance company is going to charge you as if those were real claims. You do not ever want to file a claim unless you know it's going to pay out. And the only way to know that is to talk to your agent and have him help you through the process. A lot of times roofs come up a lot over the years. I have roofing experts that I have come out and say, is there a real claim here? And they'll say, yeah, there is, or there isn't, and then we can we can make better decisions. I go back to the unintended consequences. I want to keep things as simple and easy for my clients as possible. I don't want any more hardships because if you have a hardship, I'm having a hardship. So
Well, the roof situation reminds me of somebody I knew with their car. They would file claims for the windshield cracks to get it replaced by that. Safe Life
Safe
Repair,
Life,
Safe
yeah.
Life Replace people. I was going to sing it, and I ended up doing it anyway.
Maybe
But
you should've.
I know. But they would file the claim, and there were people sometimes in the parking lot. Hey, you got a chip? I was going to take it out. We'll do it, and they file an insurance claim. Well, he got his car insurance dropped,
Wow.
and then couldn't find another carrier because he had too many claims.
Yep.
Then we had to find a discount carrier, and it was more expensive, and it was less coverage, more money. It was a fiasco. But just because it's so many of these little claims for these little chips in the glass. Yeah.
I got a call during COVID, and she was a psychologist. So you think someone who's emotionally, calm and all these things. And she called me. I never met her in my life. She wasn't my client, but she called like devastated and upset. Long story short, she had insurance with a really well-known insurance company, really reputable, millions of commercials. You all know who I'm talking about. And they dropped her. And the reason they dropped her is COVID, and she called the agency, and the agency said, "Oh, we're closed. Do it online." They had damage to the side of their home, and they had damage on the roof.
Wow.
So they filed a claim for the roof. Oh wait, we have siding too. Let's file another claim. So the insurance company took it as two claims. Like, oh no, that's too many claims. We're going to drop it. And she couldn't find anyone to take her. And she was freaking out. And we had some options for her, so it all worked out. But that goes back to the point. Just don't file claims without talking to your agent. Yeah, by the way, during COVID, we didn't miss a single day of work.
Wow.
So phones were in, we took care of everybody.
Another policy people don't talk about, but it's a good policy to have as far as your financial protection goes, is the umbrella policy. It's typically for like $150 to $300 where you can get $1 million coverage. Now, the thing about umbrella policy, you get $1 million coverage and covered up to $1 million. Well, everything under the umbrella, the car insurance, the home insurance, it has to be up to a certain minimum. So if you got a minimum car insurance that we talked about earlier, 25, 50, 25, to be considered an umbrella policy, you got to up those claims all to be upped.
Typically, some companies will do 100, 300, so 100,000, 300,000 per accident. So other companies will do 250,000 per person, 500,000 per accident, and that actually is where I recommend most people to be is at that 250,000, 500,000. If you can't do that, I actually recommend 300. But yeah, to your point, that liability has to be out first, and then the umbrella goes up above and beyond that.
Now, the last thing I want to cover here in these hidden gaps that devastate families is most people, they're working at a job, they're covered, they have insurance, they have life insurance, they're covered, yay. But people don't realize that most of that is basically one extra salary. So yeah, your family's covered for a year's salary if you have to die.
You pay the mortgage,
You're not going to pay anything, and when you decide you no longer want to be there, you no longer rich.
right? And there's no guarantee who's going to have it.
Yeah.
And then since the insurance company is helping you subsidizing that, they can change it from year to year.
Yeah.
And then a lot of times it goes up every year based on your age. So you could actually do it young enough. You can get a term policy for less than the coverage on the group. And real quick, another thing on that. Fortunately, I don't want to get into it, but someone close to me, not like direct family, but she just found out her husband has cancer.
Oh.
And yeah, one of those days. But anyways, so he's going to probably miss some work. And there could be a point where you can't work anymore. Well, guess what? There's a good chance that group life insurance isn't going to be there if the worst case scenario happens. So you got to have life insurance on your own. Thankfully, they do have life insurance to at least pay off the mortgage. When we do, and I know you do too, Joey, when you do a plan for someone, you look at the biggest expenses, you want to make sure to at least cover that.
Yeah.
So if the worst case scenario happens, at least the two kids and the wife can stay in the home. That's your largest expense for the majority of Americans. At least let's get rid of that, and then kind of go from there. So, and then the other general recommendation is usually just keep it simple. A lot of people will say do 10 times your salary. So if you're trying to figure out how much and you don't want to talk to anyone, do at least 10 times your salary.
Yeah, the math of that is kind of 10 times your salary, you know, $100,000, $1 million coverage. What'll basically happen is if you invest it wisely in good growth stock mutual funds in the market, which have a history of growing at least 10 to 12% over the life of the market, not necessarily the last years, two, whatever, but over the life of the market, essentially what you're going to be doing is pulling out the interest every year, living off of that. That's the income replacement option that
Yep.
you're using life insurance for, and the bulk amount is staying in there generating your income replacement, which is one of the tools why you have life insurance is either income replacement as a estate planning tool to pay down debt, things like that, or as a inheritance tool.
Yep. And life insurance is the only thing I know that actually pays out what it says it's going to pay out. If I have $100,000 salary, I'm not getting 100 grand. I'm paying a lot of that to taxes and everything else. If I win the lottery tomorrow, they're not giving me $1 million. They're going to give me half of that or whatever. Life insurance will actually, if you have $1 million life policy, it will literally pay all of that $1 million. You know, it's like, you know, loans or whatever against it, but there's no taxes on it. It's really a neat tool, and not enough people use it because they're not required to. Everyone has home and auto insurance because they're required to. But life insurance is just as important.
Now, I wanted to walk through a few of the life stages for people in insurance. We're running towards the top of the hour, so I'm going to be a little quick on these because I have some questions I want to get to.
Sorry, I talk a lot.
No, we're good. I think we're going to do, guys. If you're listening live on the radio right now, the show's going to end obviously at the top of the hour. We're going to be still on live on YouTube, so hop on over to the YouTube channel at www.youtube.com/@the-prosperity-lounge. We'll hang out for a few extra minutes, answer some questions that are coming in from the chat, and get to some of these other topics. But briefly here, we kind of covered a little bit. Young adults needing renters insurance, possibly basic auto, starter term policy. Newlyweds, talk to the young families, 10 to 12 times their income and life coverage.
Yep.
Higher liabilities start coming up in income protection tools. When you have a home, look at things like replacement costs, proper dwelling limits, and umbrella coverage. Retirees, we didn't get into them, but long-term care, final expense coverage, asset protection strategies.
And hopefully you got a permanent life policy early on in life, so you've got that there. Real quick, back to the home and the renters. We didn't really touch on it. Is the liability is really important. Everyone thinks liability is only if at your house someone slips and falls. It actually covers you anywhere in the world. So if anyone sues you, you can literally go to your insurance company and they'll legally represent you and pay out up to that liability amount. I had a guy who was at a country club, fell into a fire pit and accidentally took somebody with him.
Wow.
A year later, the guy got sued, and there was a judgment on him, and we, the insurance company, paid out $400,000. The country club paid out another $400,000 to companies to take care of this guy's injuries and pain and suffering and all that.
Wow. And the one of the categories that gets often overlooked, and we'll probably talk about this on the after show, so stay tuned for that. Business owner coverage, the liability, workers' comp, key person policies, buy-sell agreements. Those are all. So if you're a small business owner, hang out after the top of the hour, some bonus content. So, Joe, one of the fun things we get when I put out those questions that come in from the audience, questions that come in from the chat, questions that come in from all over the place. So I got one or two here for you, and then we're going to get to our rapid fire round of questions.
Excited.
All right. Jenna from YouTube asked, how often should someone shop their insurance?
Hi, Jenna. Well, you should review it with the current agent at least once a year. If nothing changed, maybe just do a quick glance over. Shopping is good, but be careful because, again, not every policy is the same. Every time you change, you're maybe creating unintentionally a gap in insurance. So definitely shop because rates do fluctuate. Just be mindful that they're not all the same. Even if they look the same on the piece of paper, they're not always the same.
Chris in Sevierville asked, do I need life insurance if I don't have kids?
I'd highly recommend it. I mean, I don't know what your lifelong goals are, but don't forget, life insurance will never be less expensive than right now, unless, of course, you have some illness that you get over or whatever. But in general, it's never going to be less expensive than now. And if you're young enough, you can make a ton of money off of it, create an emergency fund, help you retire. There's so many great things that can happen. Life insurance at any age. In fact, if you're 15 days old, I'd say get life insurance. Not because you're going to pass away, but because I want to start building your equity now, so that when you're my age, you have a nice chunk of things there.
I would say too, add on to the very minimum amount of final expense coverage. So the people you're leaving behind don't have to foot the bill.
Yeah, and I would be at least 10 to 15 grand for that.
Yeah, for sure. Sarah from Knoxville asked, should I drop full coverage on my older car?
That is a preference. So it depends on the vehicle, depends on the value of the vehicle, how comfortable you are. Like say the car's worth $5,000. Well, if you told it tomorrow, are you comfortable going out and buying a car on your own with no financial assistance? If that's the case and it saves you enough, absolutely. Um, if it's if full coverage is only a few bucks more and you can get 5, 8 grand out of it, I'd maybe hold on to it. It's a personal preference and great conversation to have with your agent.
Perfect. Now, this gets to one of our newer segments. We do this on a Wednesday show for everybody. Everybody there gets the same set of 10 questions, but here on Friday we mix it
You
up.
didn't prepare me for this, for the record.
No, this is off the cuff. This is a rapid fire. You got to think what's in your head. So on Fridays we do a kind of theme towards your wheelhouse here. So these are all insurance based rapid fire questions.
All right. Could have been football too.
I'm
sure it's worse.
No, I don't know. Let people in here. All right. First words that come to your head. First thought. Term or whole, which one do you recommend more often?
Oh, that's tough. I know we're gonna be like whole. Permanent.
Okay.
Actually permanent.
Most underrated insurance policy.
I'd have to go with life insurance.
One word that describes a great insurance agent.
Karen.
Love that. Biggest myth about insurance.
That agents get 50% of the commission. I see that on YouTube all the time. It's a total lie. We get very little commission, but that's great.
Most common mistake while filing a claim.
Thinking there's no consequences to filing a claim.
Independent or captive agent preference.
Hybrid.
Oh, got a couple seconds to
Benefits
explain.
of both. So captive agent has better access to the insurance company, a bunch of knowledge. Independent's great. You have a lot of things you can shop and price. I'm a hybrid agent. I have both, and I feel like that's the best way. Obviously, I'm being biased, and that's a new thing. That's just starting to become a thing.
Okay. Most understood insurance term.
Most understood or misunderstood?
Misunderstood. I don't write.
I would go with liability.
One upgrade every household should consider.
To their home, to their policy, or their home?
Just in general.
I'm going to go with the insurance water backup.
Water backup. Okay. First policy people should review annually.
Well, if they're homeowner, home insurance, otherwise they're car insurance.
Finish the sentence. Insurance gives you
Peace of mind.
Got 2 bonus questions for you. What is your personal definition of prosperity?
Success, freedom, being able to live out your goals, your dreams in life.
And one final bonus question. Bears make the playoffs?
And I knew you were going to go that route. I'm worried about this week.
Okay.
And so for those who don't know, I'm a diehard Bears fan. We have to dislike, I won't use the word hate, we have to dislike the Packers. And they've had our number for quite a long time. I'll just put it out there, yes, we're making the playoffs and we'll beat the Packers this weekend. Behind closed doors, I might tell you something different. Out in public, I'm going to stick with it.
Can I get your best? The Bears.
The Bears.
I love it. Gonna have some sausages later from Swarovski's.
There you go.
Maybe get a suit for Dicka.
There you go.
So,
should we end the radio station with good, better, best?
Oh, I love that. Well, this has been an incredible conversation. Before we close, where can people reach you for policy review or consultation? What's your best contact?
Yeah, so we got a couple phone numbers you can reach us at. The one that you can text us as well as call us would be the 847-223-4747. We also have the 865 number. And then email Lapera at farmersagent.com. And then we're on Facebook. Just look us up, Lapera Insurance Agency. You'll find us out there.
Perfect. Just pop the QR code back on the screen for people to scan. Take it right to your website. Phone number there as well.
My team and I are happy to help.
Sweet. Remember, mention that code JR Radio for some special gift cards if you're the first 10 people. It's early in the month. Get over there.
Anytime.
All right. So, friends, insurance is not a bill. It's protection. It's stewardship. It's peace. When you understand your coverage, you protect your family, your finances, and your future. Join us at theprosperitylounge.com join the free community and subscribe to our YouTube channel so you don't miss out on our Wednesday premieres as well as our Friday live stream. On Wednesday, we're in the chat having some fun as well, talking to our guests and then having a great time. Sometimes we go live after and just continue the party. It's a great time. So until next time, everybody, stay faithful, stay fearless, and remember, freedom lives where faith and action meet. The lounge is always open, and so is your next breakthrough. This is the Prosperity Lounge. We are off the radio. Good job, Joe.
Nice. Thank you.
So we're still on here on YouTube. We've got a bunch of questions that came in. Let's see what we
Hello,
got.
YouTube.
We had up to 15 people in here, which is great for a live. 11 people still here. We got a bunch of questions that came in. Emmy was asking, she was bringing a lot of people in. So Emmy's our map. No, I don't know. You got cheerleader for the show. She always bring
promotion.
Yep. Yeah. She earns points if people come in and they in the chat. Emmy said here.
Nice.
Points. So
Good job.
A lot of people came in for that. Let's see here. I gotta go watch a movie. Okay, so there's a couple. Yeah,
you can't leave until tell us the movie.
And it's like, yeah, people asking the question, what movie? I don't know yet. There was a question that came up about the term stuff before. I'm trying to get back to it. I used to run into people all the time that couldn't qualify for term, but then would refuse to get whole because a certain man, Dave Ramsey, said not to. So they would opt for no coverage and go uncovered. That's a pretty dangerous situation. I'd rather get some coverage than no coverage.
Yeah, and there's some what's called guaranteed issue policies where, it's more expensive and yes, it'll be less dollar amount, but something's better than nothing. In fact, you know what the most important life insurance policy is, Joey? The one that's enforced when you need it. So something's better than nothing. So even the worst case scenario, you can probably get life insurance. And I will say the eligibility is changing all the time. People 10 years ago with diabetes and stuff like that might not have been able to cost. Now they can. So there's so many options out there. They've been denying the class of dragon, and it's easier now too.
It was one of those things. I think it's what you were talking about. This they come in the mail and fill this form, and it's like $5,000 coverage per year.
That's really a good final expense, and that's better than nothing.
Yeah,
but I would definitely try when you run into such a benign class of dragon.
Absolutely,
it's changed so much.
So one of the things we didn't get into is business. I do want to cover that a little bit if you have time.
Yeah, absolutely. Business is really important.
Yeah, so let me get my notes here to make sure we get the right stuff out. All right. So things for the business stuff is liability, workers' comp, key person, and buy-sell agreements. Let's start with business owners because a lot of us solopreneurs nowadays we just think we're good to go, but
a lot of people get a general liability policy and that's it. So first thing to know is homes and cars are all relatively the same. Businesses are all completely different. We could bring in 10 landscaping companies. They're all going to do different things, and not every insurance company is going to want them. So don't treat your business insurance like it's just run-of-the-mill policy. General liability is great, but you also might need errors of omission, professional liability. If you've got business property that you get covered, liability is probably more important for a business because your exposure to the world is a lot more than you as an individual.
Okay. Now, liability we're talking about is basically like if I screw up and give you the wrong advice, you sue me.
That would be more professional liability.
Professional liability.
So general liability would be I'm painting this nice office and I accidentally drop the paint can and it spills everyone, some slips and falls. That takes care of that. But if I make a mistake in my craft, like I rewire this house the wrong way or I give bad advice to your point, that's going to be more of a professional liability. So those are two different worlds, and that's a lot of people just get general liability policy and think they're covered for everything. That's not always the case.
Not at all. Okay. Workers' comp.
Really important if you, especially if you have employees, and they've really cracked down on it. So even if you don't have employees or have only 1099 employees, they've caught on to that, and legally in most cases, state by state again, you're required to have it. And some of your clients, people that are going to pay your business, will require you to have workers' comp even if you have no employees. But in general, workers' comp basically, if your employee incurred on the job,
Mhm.
whatever the job is, insurance company or a painter or everything in between, that's going to cover their expenses. That's going to take care of the employee so they don't sue you. They get taken care of. It's really important to have.
Now these two kind of go hand in hand, especially if you're a owner of a business and you have partners. It's the key person policy and buy-sell agreements.
Yep. So with buy sell, that's really great for the partnership. So basically, Joey and I have a business together, and I pass away. I own half the business. Say it's $1 million business. So essentially, $500,000 goes to me, my estate. So Joey can choose to work with my wife, who is amazing, but she also has her own vision. He might not want to work with my wife. So what he'll do if you buy sell agreement is they'll have a life policy enforced that'll pay my wife, and he gets full control of the company. And I don't think there's anyone out there that wants to work. You partnered with Joey, you partnered with his wife, you didn't partner with my wife. So you want to be able to make sure, if the worst case scenario happens, you can keep that business going and not be forced to sell it or work with someone who, doesn't know the business like you.
That's one of the things we have it on each other, right? So it's
Yep.
like I have it on you, you have it on me.
Yeah, there's a couple of nuances and ways to do it, but yeah, essentially, I have a life policy on you have one on me. The business can pay it, or we can pay it individually. There's a couple ways to do it. And a key person is maybe not a business owner, but maybe Joey and I have a business, and our number one top employee can't live without. We'll get a life policy on them because if they pass away, maybe all our income will dry up overnight. So we'll get paid something so we can offset the loss of that individual.
So if I got a key person policy on my engineer for way more than he's worth, and I bumped him off, replaced with somebody better, I can do that.
I'm pretty sure that's frowned upon.
I don't think he's listening.
I don't think
right
he's
now.
listening, or he's
No.
choosing to ignore you.
I think see what happens in there when they're watching is they chat and they put the volume down on YouTube and they listen to it over the radio only, so they're not really hearing what we're saying right now.
He might even be sleeping right
He might be. He's not doing his job. What was I going to say something about the key person stuff? It's really important nowadays to have some of that because partnerships in general are one of those things where, yeah, you kind of need it for a business, but it's one of those, and I do believe Dave Ramsey and a few others have said, kind of subscribe to it a little bit, is partnerships are the only ships that don't sail.
Yeah.
Because sometimes you have to rely on other people, and there's a lot of, I think it's the 7 Ds of a partnership. It's like death, divorce, drugs. There's a whole bunch of stuff that somebody you have to make sure they're not doing
That
that
makes a
stuff.
lot of sense. Yeah.
The debt and a whole bunch of other things
I've
that
seen
can
that
ruin your
before, too.
business. Yeah. So having a policy on them, well, only covers if you die. You can't really-
Right.
Those
So
could lead to
Wisconsin,
something.
life
Yeah.
insurance, right? So we get hurt on the job.
Yeah.
Make sure we're taken care of.
Somebody in the chat said we're gonna have to get key person insurance on Emmy. Yeah, I think so. She's very important. She's been
Keep up the good
fantastic.
work, Emmy.
Yep. Emmy's in 7th grade.
Oh wow, even better. Good job. Keep it
Yeah,
up.
she's fantastic. She's been great. Her sister is Gracie, who I've had on the show as she's my first guest.
Oh,
She's
yeah.
the 15-year-old
Yeah,
baker.
I remember.
Yeah, so they come to the chat, her mom and everybody else. So it's cool. We gave her a bunch of stickers one time recently, like with our logo on it. Hey, pass this out where you go. And I think they went to Walmart, and she went and passed out all the stickers at Walmart to everybody she could see at one time. So any more stickers, I'm like, oh man,
That's awesome.
that was supposed to be for a while.
Right.
But she's been great.
I love that family already.
Yeah.
Business
They're
owners.
awesome. Yeah, Gracie actually just opened her first farm stand
That's awesome.
up in 15. She got a farm stand with all her big goods out. Man,
I love it.
get fat just eating it. But okay, anything else you feel like we need to kind of over anything? Was there anything we might have missed, Joe?
Oh, that's a great question. I did a pretty good job. I think, the 800 names and all that are fine. But have someone you can trust.
Yeah.
And run things by versus just calling some stranger and relying on them and they're reading a script to you. You want someone who has your best interest in mind. Is really what it comes down to.
Yeah.
And that's anything. It doesn't even have to be just insurance. Like you want someone who's you're not going to go to a doctor because they're the cheapest, and you can go to a doctor that you feel comfortable with and feels going to take care of it.
Yeah, I think also too one of the great things is don't get married to a company, but once you get married to your agent.
My wife is probably frowned upon that.
You want to shop around for your agents because not everybody who's an agent, let's say company X, has your same interest at heart,
Right.
right? They may not be available. They may just call you back. Somebody's going to call you back in 5 minutes. They might call you back 2 days later. That shop around for an agent that
Yeah,
you
absolutely.
trust and you can talk to and really has your best interest.
And once in a while, that agent might turn you down, and that's okay because that means they don't feel they have the right product for you. I always said, like, especially when we were in a captive agency, is I never want to take a square peg and put it in a round hole. Like if it doesn't make sense, I'll help you find the right agent. And that's actually I love networking with other agents, and I can hand people off if they're just not a good fit for us. So
Yeah,
at the end of the day, you want somebody who's going to take care of you.
yeah, it makes your life easier, makes their life easier. It makes that process when they do need to use their insurance
Right.
a lot easier and calmer, and because you know how to deal with them, they know how to deal. Then you know what to expect from them. You know how they're going to react.
Well, we really act like a liaison, right?
Yeah.
Do you want to be stuck on 800 numbers for an hour, or do you want us to handle it for you?
Yeah, I want to do that. That's why I pay you the big bucks.
Exactly.
I love it. All right, everybody. Well, I think we're gonna wrap up here now. Thanks, Joe, for hanging out for
Thank
the
you,
last
Joe.
bonus time here. We learned some great stuff about insurance, stuff that I didn't know. I'm supposed to. I still got to do my CEUs on that.
So do I.
I know coming up
I did
next
do
year.
by May, so
I think I have until the summer. See, the fun part is every year I have to do the marketplace exchange thing because I'm that.
yeah, I'm not a fan of that at all.
Don't get me started. The rule changes every year. That.
Yeah.
And then the plans they change. It's the same plan, but they change their name every year. It's like just tweak one little thing, and it just throws everybody off.
I
it's
just
not
finished
fun.
my compliance for my financial license, and that 3 hours videos and questions, and
Yeah, I'm not a fan. So that's something goes on behind the scenes with your agent that you don't see. They're actually continually learning, continually educating themselves to be able to serve you better. So
yeah,
thank them when you see them.
the world has always changed. And that's another benefit of a cap agent is there's no way you can get all the changes of 10, 15 insurance companies. They literally change sometimes monthly, but it's definitely like quarterly some big changes. And so it's hard to be an expert in too many companies. So,
Yeah, there was one I think the life insurance company, annuities or whatever it was. And, you get placed with them, or I can't remember the exact terminology. Seated, placed. When you sign up to be part of their business,
get issued or
the right term.
license. I don't know.
Yeah,
Got me stumped.
yeah. Give me for a second. So when you get your license pointed, that's it. You have your license, but you can't do anything till you're appointed by the companies. You have to
I get
apply.
5 points.
Yeah, you do. So you got 5 points, 5 pieces.
And you
of
have
candy.
1. So not that
I got 1.
Another.
But there was one you get appointed to. It was it was life insurance with annuities, and it was like 50 different companies there. I can't know all the ins and outs of all of them. As long as they help me be compliant, I'm fine.
Yep.
Just do it. And the paperwork looks good. When I send it in, it looks good. They update it for me, so it really matters. But yeah, there's a lot of stuff that goes behind the scenes. But definitely thank your agent when you see it. So that's going to be it for tonight. Thanks for hanging out. Next week, big show on Wednesday. We have our normal 6:00 podcast. That'll be our live premiere where we're in the chat, we're talking, we're watching an episode of what's going on. Still gonna tease you on who the guest is gonna be for that because I'm still not sure. I have to weed through all my interviews that I have pre-taped. A lot of them, but it's gonna be a fun one.
The high demand is gets to be selective.
Probably can continue that Liberty series, and we'll go from there. But Friday, man, I'm looking forward to Friday. Friday Santa's gonna be here live in studio. Questions: whose favorite reindeer? What's his favorite Christmas cookie? His favorite Christmas movie? And
Watching.
And then I got to think of about another 57 minutes worth of questions.
5 minutes later. Well, I'll just get my daughter calling. She is a talker. She'll take the next 50 minutes.
Sweet. Santa does not smell like beef and cheese. But yeah, so that'll be fun. And we'll represent East Tennessee Children's Hospital. In fact, we have, I'll get the name here because I'm going to try and pronounce it right. Natalie Havasey. from East Tennessee Children's Hospital. She is the Public Information Officer, Community Director of Marketing and Community Benefit, and Child Passenger Safety Technician. She'll be here live in the studio to talk about East Tennessee Children's Hospital. We talk about the fantasy trees, gala trees that just happened as well. We were there for that. Checked all the fun trees out, and talk about what they're raising money for this year. So be Santa and them having some fun. There's still some opportunities available to sponsor the show. There's a title, feature sponsor and a main sponsor still available. And if you don't feel like doing that level, there's just a standard custom amount. You can pop in and donate anything there. And there's an individual section too for individuals that want to donate that don't have a business. And then there's a $25 amount and then a custom amount. So you want to do $1 or $2, whatever you want to do, you can. And all the proceeds are going to East Tennessee Children's Hospital. So let's try to see what we can raise for them. And then this is the first, I hope, of many bigger and better opportunities. This is the first annual, so maybe next year will be bigger and better with this.
Eat it every year.
Absolutely.
By the way, it's a great thing you're doing there.
I appreciate that. Thank you. I was looking forward to seeing how that goes. And so good night, everybody. Have fun, stay well, stay blessed, and we'll see you in the chat. We'll see you online. Make sure you subscribe so you don't miss if I go randomly live like I do sometimes. And that is it. Take care.
This is where momentum meets the sun. The prosperity